Hey, Adam Hooksema here from ProjectionHub, and in this video, I'm going to be walking you through the process of trying to sell a division of your business to a buyer who's using an SBA loan. So the problem with these deals, they're called carve-outs oftentimes. The problem is that the business has one tax return, and the SBA lenders are going to underwrite the deal. They're going to make decisions based on tax returns. But the problem is that let's say you have an HVAC company, and you started in one city, and then over time you expanded to this other city, and you didn't set up a new entity. Maybe it's just you started taking some service calls in this other city, and then slowly over time you grew more and more, and then all of a sudden you had some dedicated staff over there and maybe an office in this other city. And now at some point you said, I don't want to sell my entire business, but I'd like to sell, or I found a buyer who just wants to buy this city's operation. So city A, but not city B. Now the problem is my tax return, both cities are just lumped together. And so from the SBA lender perspective, they don't have a good way to be able to tell what revenue is city A, what expenses are attributed to city A, so that they can get an idea of whether this carve-out portion of the business is profitable, whether it can cash flow an SBA loan. And so what you have to do is provide them the documentation that they need that is going to show, here's my tax return. I've got one tax return. I need to show a couple columns here. Here's the revenue and expenses for city A that I'm trying to sell. Here's the revenue and expenses that are allocated to city B. And these two columns, when you add them together, they equal the tax return. We can tie them to the tax return so we can prove that these are accurate numbers. Now, the problem with that is there's a whole bunch of judgment that comes into how do you allocate between expenses between city A and city B. And so you need to have some sort of process or description, explanation of why you put $10,000 in this city and $20,000 in this city for your expenses or your revenue. How did you come up with that? You need to be able to document that. And so I've got an example here of kind of a simple, again, HVAC business with two different cities, and you're looking to carve out city A. This is the type of thing that you need to be able to provide. Let's say you've got, $1 million revenue business, and you are wanting to sell city A here that does about $400,000 in revenue, $64,000 net income. So it's a small business, but this division you want to sell off. Now you're going to have to make a decision to split up the revenue and the expenses for each city. And then you're going to need to leave some comments over here and give a description of why and how you split it up. So this example comments here, we could say this was allocated based on actual billings in each city, and maybe you have receipts you can use to back up, and you have job costing records, and you can tie the cost of goods sold to each particular project. On the payroll expense, let's say you might have one technician that works in both cities, right? But you have the ability to track by location and the jobs that they do. And so based on that, you can kind of split up their time and show that and demonstrate that in the spreadsheet, right? Maybe from a rent perspective, maybe you have two different offices, so that would be easy. Utilities are based on each office. Ad spend, maybe you have different campaigns. You're doing Facebook ads and you have different campaigns, and you can see campaign A, campaign B, and you can split that up and document it. So this is the type of work that you're going to have to do. Now, this is a pretty simple example. You can get quite complex. Now, the SBA recently came up with some description of they have the ability to use a CPA reviewed or CPA prepared documentation or financial statements. So they understand that, hey, there's going to be one tax return. So as long as we have a CPA who can kind of outline, hey, here's the financial statements for each location, and here's how and why we allocated them the way that we did, and we can back that up, and we're willing to kind of sign off on that work. The SBA says now that lenders can accept that from the seller. And so that's something that we can help with here at ProjectionHub. We can work with you to kind of prepare this type of structure and report. We're going to rely on you to provide the documentation, right? You're going to have to provide the backup, and the SBA lender may be asking you for reports and documentation. We can, a lot of times there's a sales report from your CRM or something like that, or some sort of point of sale system report maybe that could help with the revenue. We could add that in here as, other attachments or tabs in the spreadsheet model to kind of tie to. That would be the ideal situation. So anyway, there can be some value in trying to produce these kind of separated income statements, but it can take some time. And so if that's something that you think would be useful for you, feel free to reach out to us at support@projectionhub.com. We'd be happy to talk to you about your specific situation, what you're trying to accomplish with a carve out, and see if we can put together a report that's going to make sense and kind of meet the SBA requirements. So hope that's been helpful thinking through this process. Again, if you have any questions at all, please reach out to us at support@projectionhub.com. Thanks.